Today's training is once again about the secrets of Fibonacci trading, and it is live analysis of the market. We'll be looking for three currency pairs. It is going to be Euro dollar, pound dollar, and USD Canadian dollar. The webinar is sponsored by Trade 360 and delivered to you by A to Z Forex. And my name is Yagu Brahimov. For those of you participating in this training for the first time, just before we start the training itself, I would like to just deliver the risk disclaimer for your attention. In short, Forex and overall all the financial instruments which are based on leverage trading carries high level of risk, and therefore they might not be suitable for everyone. Therefore, you shouldn't invest the money that you cannot afford losing. Today's webinar, as I told you, is delivered to you by A to Z Forex and in association with Trade 360 crowd trading platform. And we are going to be looking for Euro dollar, pound dollar, and USD Canadian dollar. If you know the way that I analyze the market, I take the top to bottom approach in every one of my analysis. Each one of my Fibonacci wave must be confirmed on weekly time frame before I can move down to any other time frames, and I only draw the Fibonacci time frames or Fibonacci waves on weekly time frames. If we look at the Euro dollar on weekly time frame, we can see that the pair is right on the 10% custom Fibonacci retracement zone. It is very close to it, which was at 1.0614 level. Although at the moment it is below the 10%, close to the 0% Fibonacci retracement zone. You can see the level that I have drawn the Fibonacci retracement zones before. It's over here basically, and down here. So looking at it overall, we can expect the pair possibly to touch to the zero level and reverse back to at least the 38.2%. Anyway, I'm going to be showing more on this in just a bit. Let's move on. On daily time frame, we can see that there is a strong support at the 1.05 level, to be more precise, 1.0550 zone. It is a very strong level, and we can see that the MACD is showing signs of potential bullish reversal. When MACD signal line goes below the MACD bars, this is a sign of potential bullish development. So we have that kind of indication at the moment, and we can see the fading out bearish power at the moment, as we have had very narrow trading channel for the last almost entire month. We can see it from October, end of October. The pair has just been moved between 1.0750 to 1.0550 zone. So in total, in 20 days time frame, 200 pips is a very narrow market move. On hourly time frame, we can see the market a little better. That the current level, which I have marked with kind of golden color rectangle, marks the sideways development of the market. As long as the market hasn't penetrated this level above, we are not really looking for bullish development. Although hourly time frame indicates the bullish power at the moment, the market has gone above the 50%, the 50-hour moving average. It is just below the 200-hour moving average. I call it moving average sandwich at the moment. So it's a sideways development. And as long as the market hasn't broken above this 200 level, 200-hour moving average level at 1.0630 zone, we are not really looking for bullish development yet. However, though, there is a possibility that for the market to even penetrate below the 1.0520 zone, which is the 0% Fibonacci retracement zone. And as you can see, I have marked negative 10% Fibonacci retracement zone here as well, and that's the 1.0425 level. You can put yourself a pending buy level at a 1.0425 level. If that level is unleashed, you're going to be seeing a bullish reversal from there on, at least for 300 to 400 pips movement. My target will become at, if we have that level unlocked, my target will become at 1.08 80 zone, which is a 38.2% Fibonacci retracement zone. And you can see this level overall being a very good previous support and resistance level as well. Back to CrowdData from Trade 360, we can see how the market is evolving. The way I look at the market for Trade 360's CrowdData is quite unique. I don't really look for all traders' data, so the first two lines, as an example, I don't really follow it. At the moment, I'm in the Netherlands, so you can see it's showing me what the Dutch traders are doing. But if you look at it, you can see that best traders, which means those of the traders who are profitable most of the time, are long in 53%, and 47% of them are shorting. This doesn't say us anything yet, at least from my market outlook perspective. However, if you see that Trade 360 CrowdData is telling for the best traders 75% or above bullish, it is an indication for you to start selling, or the other way around. If you see that the Trade 360 data is telling you that 75% of the traders are bearish, in general, I find it out that the market will be reversing bullish side very soon. Back to now other currency pairs, and now I'm going to go through the pound-dollar cable. I've drawn the Fibonacci retracement zone for the perfect Fibonacci wave of the May-June levels, and you can see that the pair is right on the 150% Fibonacci retracement zone at the moment, which is at 1.5040 zone. The market has literally touched to the previous support zone, and also the overall 1.50 psychological support zone as well, and reversed onwards from this happened yesterday. It was very close to the 161.8% Fibonacci retracement zone. On daily time frame, you can see it. It was just 20-25 pips difference. So right now, I'm not in favor of shorting pound dollar yet. However, I will once again be looking for bullish opportunities, and my targets will remain initially at 110%, which is 1.5273 level. On hourly time frame, you can see the support acting very strong. 1.50 psychological resistance and support zone is very strong one over here, and it was just very narrowly missed by the 161.8% Fibonacci retracement zone. It is at the moment being traded between 250-hour moving average as well. So we have a sideways development, and I'll be looking for bullish opportunities above the 200-hour Fibonacci moving average. I just keep saying Fibonacci for some reason. So we would be looking for the cable to break above the 1.5135 zone in order for us to consider any bullish further opportunities. Now let's look at the cables CrowdData. We can see, if you remember what I said from euro-dollar, we can see at the moment for cable, the best traders trading 69% on bullish side. It is very close to the 75% level that I was talking about a bit ago. What it means is that you have to just be cautious at the moment in your bullish entries, since there is a possibility for the market to reverse backwards, to retrace first on a bearish side before attempting to achieve any bullishness. And that's for the cable. Those of you participating in my Skype group know that I gave a signal or analysis. It wasn't really a signal on Friday to sell USD Canadian dollar at 1.3370 zone. At the moment, we are standing at 40 pips of profit for this entry, and you can see the reason behind my analysis. I basically looked at the market on Fibonacci perspective. It was very close to 10% custom Fibonacci retracement zone, which was at 1.3395 zone. On daily time frame, you can see it much better, and it basically gives us a signal that the market is likely to move initially towards 38.2% Fibonacci retracement zone, and following there, I'm actually expecting the pair to move to 61.8% at 1.3070 level. So if you haven't entered that entry yet, it is not really the best time to enter right now because you have already missed the train by some 40-50 pips. However, you can aim for the pair to break below 1.33 level, and your initial target will become at 1.3235, and from 1.3235 zone you can just aim for 1.3070 zone. The bearishness is also supported on daily time frame by our MACD as well. MACD, again, you can see that MACD signal bar is signal line is above the MACD bars, which is a bearish market development indication, and the candlestick is also giving a bearish reversal candlestick formation. On hourly time frame, you can see the pair perfectly in line with our bearish view, as the moving averages are turning their slopes. The market has broken below both of the moving averages, and we are looking for MACD as well that's below the zero line, applying and supporting the bearishness. And therefore, we don't really have much option but to follow the bearish market development, which is supported by the USD Canadian dollar CrowdData as well, that 54% of the traders are selling, and some of the, of course, many of the novice traders are still buying. So it is a dilemma right now. My idea is to sell as close to 1.3390 zone as possible, and aim for at least 400 pips from this pair. This is it so far for today's webinar. You can go ahead and register on Trade 360 as well to be able to see this kind of crowd data. It's very beneficial for you, especially to look for the 70 level, 75 level for the best traders. Each time it happens, your targets should be staying out of the trending market, and look for reversals or retracements or corrections, no matter how you define it. Or if you are in line with that kind of entry, you can consider exiting your take profit, or exiting your position in order to stay on a safe side of the trend. This is it so far for today. If you have any question, please feel free to ask it now. Of course, we have a very good comment from Danielle. This analysis that I've just shared is purely technical analysis. There is no fundamental involved. If you have news coming up, for as an example for Canada right now, you need to be cautious about the Canadian dollar. It's not worth risking it blindly just because of technical analysis. Any other questions? Okay, we can go back to euro dollar. So the question is from Hiran, why if I understand it correctly, it is basically asking why I have selected this level to draw the Fibonacci. It's very simple. It is a perfect Fibonacci wave for me. I'll have a Fibonacci trading next week. So if you haven't, if you have signed up for it, if you manage to be one of those lucky people, feel free to be there in order to learn the reasons how I draw the Fibonacci levels. All right. Another question comes from Danielle. What's my opinion about oil? I'll go back to USD Canadian dollar. Basically, if you look at my analysis, it is supporting stronger Canadian dollar, which basically means potentially bullish oil. Basically, when I trade or when I analyze commodity currencies, I first analyze the commodities first. So at the moment, my outlook is that if you are going to be trading oil, you need to look for buying oil at 39.15 zone and aim for 46.58 zone. This is, of course, for WTI, not for Brent. So buy WTI, or it is preferable to buy WTI at 39.15 zone or as close to it as possible, with the target of 46.58 for 45.72 levels. These are approximate levels that I can give you by heart. Okay. All right, guys. If I have missed any of your questions, you can still ask me on Skype. Feel free to add me on Skype, Y Rahimov. It's basically my initial and my last name. And you can also join my Skype group as well. Thank you very much for being with me today, and look forward to having you in our following webinars as well. Take care for now. Bye-bye.